Hello everyone and welcome. Today we're talking about flexible spending accounts and how they can save you a tremendous amount of money. A flexible spending account, also known as an FSA, is an account set up through your health insurance to save you money on your health care expenses. For 2020, the contribution limit is $2,750. That is up over 2019's number of $2,700. But many companies lag about a year. So if you're in 2020 and you're trying to set up your FSA account and you're seeing a contribution limit of $2,700, don't worry, many companies lag behind about a year, myself included. My company's lagging behind about a year, and so I can only contribute up to $2,700. And with that, let's dive into the pros, the cons, and then how I set up my FSA account. And one disclaimer is that none of this is financial advice. These are just my experiences, how I've set up my account, and the research that I have done. Okay, the number one benefit of an FSA account, and the reason why most people put money into this account, is that it's tax-free dollars. Traditionally, your company will pay you money, taxes get taken out right away, and then you're left with whatever is in your paycheck to pay for your expenses. For an FSA, your company pays you, the FSA dollars are taken out pre-tax, and then you're taxed on whatever's left. This can translate to up to a 30% savings, so that's like walking into the pharmacy and paying your prescription for 30% off versus paying strictly out of pocket. Another big benefit of an FSA account versus an HSA account, an HSA is a health savings account, but an FSA allows you to use the dollars right away. So say you're contributing $1,000 to your FSA account and your plan starts on January 1st, but you end up in the hospital January 2nd, those $1,000 can apply right away. You can use them on January 2nd to pay for any medical expenses. The contributions will come out over the course of the year, but the funds are available immediately for use as soon as the plan starts. Another benefit of an FSA account is the variety of things you can pay for using tax-free dollars. Initially, when I heard of an FSA, I thought it was only for medical expenses from, say, a doctor's visit. But that's not the case. You can go into your pharmacy and buy ibuprofen, sunscreen, saline solution, you name it. As long as you avoid the candy aisle and the Hallmark card section, you can almost expense everything else through your FSA account. Check out the FSA store online. I've linked to that into the description below. Every item in the FSA store qualifies for you to spend FSA money on, and you can also go to the pharmacy, buy the equivalent item, and then get it expensed. Now, one tip here when it comes to buying things at, say, a pharmacy, or even if you're at the Walmart pharmacy or wherever you are, is that oftentimes the FSA card that you have may not work. You go and you swipe it and it rejects the card. That's not a problem. It's actually pretty common. Just take that receipt with you, take it home, log into your account, and then expense it from there. It's pretty simple to do. You just log in and with a couple clicks, upload the picture of your receipt, you should be all set. Oftentimes, if I'm going to, say, Walmart and I'm picking up a number of items, I'll keep the items that I know would qualify as a separate transaction just to make it easier on myself so that when I go to upload the receipt, I can just take a picture of that one receipt, upload it, and I'm good to go. Okay, so we just walked through some of the pros for having an FSA account. If you like this video, I ask you please give it a thumbs up and subscribe. Liking the video actually helps YouTube recognize that this is at least half decent content to share with others. So I ask you please like the video. Okay, the number one con for an FSA account is the fact that it is a use it or lose it account. If you contribute dollars and you do not use them by the time the plan is up in a year, you will lose that money. Now, there is a grace period of 2.5 months. So say, for example, the plan starts on January 1st. Well, the plan would typically end the last day of December of the same year, but you get a grace period until March 15th of the following year. So you get 12 months during your regular plan plus 2.5 months during the grace period. One thing I noted before was that the FSA dollars qualify for a lot more than just a medical bill. So if you get to the end of your plan, you could start stocking up on things like Band-Aids, maybe even just a first aid kit, or a whole variety of other things to spend those dollars. But But if you are unsure of what you may end up spending throughout the year, there are calculators available for you online. Simply Google FSA calculator and it will walk you through a worksheet and it will work through what you should set aside in your FSA account. Many people do not contribute to an FSA account simply due to the fact that they may lose the money at the end of the year. But as I noted previously, the FSA dollars qualify for a lot more than what you may have previously considered. So with that, it might help cover some of your initial medical expenses, plus other items such as suntan lotion and ibuprofen. Personal example that I had was I actually had an HSA account with a previous employer, but I was ending employment with them, so I had to spend the money right away or I was going to lose it. I bought a ton of saline solution for my contact lenses, and my wife bought a number of other things for our kids, and we were able to use those dollars. So even in that case, we knew we were going to lose that money, and we still had half of it available, and we just went through and just loaded up on things that we knew we were already going to pay for. Again, suntan lotion, ibuprofen, saline solution, you name it. We were buying a bunch of stuff in bulk up front, and now I've gone the last 7 months without having to buy saline solution for my contact lenses because I already bought it at the beginning of the year when my other plan ended. Okay, so that leads me to what do I personally do with my FSA account? Well, my deductible is $2,000, so I know I'm going to at least set aside $2,000 to meet my deductible. So that will give me $2,000 tax-free dollars, and once I hit my deductible, I'm taken care of from there, but that's going to set me up for success to make the most bang for my buck in terms of at least meeting my deductible. Now, one thing to note is that not all purchases go towards your deductible. If I go buy a bottle of saline solution, it's likely not going to go towards my deductible. So I have to keep in mind that if I go buy other items, it may not apply. It's pretty straightforward to understand this because you log into your account and it'll show you how much you've spent on your FSA card and how much has been applied towards your deductible. So it's an easy visual to see the difference of where you are. And at the end of the day, if you have to pay a couple dollars out of pocket, it's not the end of the world, but at least you're taking advantage of the tax-free dollars. Personally, my wife and I just had a baby within the last several weeks, so we now had a qualifying life event that we can reassess our medical plan and make adjustments. So now my wife and I literally are this weekend going through our medical expenses and seeing, okay, if we've allocated $2,000 for our deductible, but we may have spent in other areas that didn't qualify, we may actually end up upping our contribution to cover those other areas to take advantage of the tax-free money. So with that, I hope that gave you a quick summary of an FSA account and what it's intended for. It's for tax-free dollars for your healthcare expenses. You got some of the pros, the cons, and then what I do personally. I hope this video has helped you in understanding what this account is for and how it helps you get ahead with your dollars. And if you enjoyed this video, I ask that you please like and subscribe.